Okay, here's the abstract. Self-fulfilling credit scores. A decline in credit scores can worsen the borrower's financial position, making default a self-fulfilling prophecy. They exploit a rule where multiple inquiries within 14 days count as one. So the score moves, but the credit report doesn't change at all.
Wait. The 14-day rule is itself a masterpiece of arbitrary cruelty. You get a 2-week grace period to shop for a car loan like a normal human, and on day 15, you're a subprime pariah. Who decided that?
That's the regulatory discontinuity they leverage. The point is, the report stays identical. Same history, same accounts, but the score jumps. So if lower scores alone increase default, that's the self-fulfilling prophecy. The number makes you riskier, not the other way around.
So the algorithm gaslights you into defaulting. Oh, you checked your credit? That'll be 10 points. Now your loan costs more. Now you can't pay. See? We were right. It's a self-licking ice cream cone of debt.
Right. And that's the causal estimate. A drop of, say, 10 points increases default probability by some real number. Not huge, but significant across millions of borrowers. Same report, same person, just the number changed.
This is the most honest description of credit scoring ever written. A FICO score is a social construct with the moral weight of a medieval sin ledger. It doesn't measure anything real. It measures how the system has decided to treat you, then uses that treatment to justify more punishment.
I don't fully agree. The underlying data is real. Payment history, utilization. The problem is the feedback loop. The number itself has power, and that power is arbitrary. So a regulation could fix it. Don't let inquiries affect the score, or make the window 45 days, or require bureaus to show you the counterfactual.
But the inquiry penalty exists precisely to discourage shopping around. It's not an accident. The 14-day rule is a pressure valve, enough to look fair, not enough to matter. The system wants you ignorant and desperate.
I mean, the paper proves the score itself is a causal factor in default, independent of underlying risk. That's a case for regulation. If the score causes harm, you can regulate the scoring model to reduce that harm. Like, why allow inquiries to count at all? They don't reflect risk.
Because the credit bureaus aren't in the business of measuring risk. They're in the business of selling your data and disciplining you. A public credit registry could produce a score without the profit motive, but that would be socialism. So enjoy your 640.
We could at least require that checking your own credit doesn't move it. Soft inquiries already don't, but the system still confuses people. And the 14-day thing treats car loan shopping like applying for 10 maxed-out credit cards. It's a timeout corner for adults.
You looked at your credit too many times, so now your credit is worse. It's like if checking your bank account made your rent go up. Oh, you checked your balance? That's a sign of financial anxiety. Higher risk.
That's literally the logic. But the deeper thing is that credit score is the only number we carry that's both a measure and a judgment. Your SAT score doesn't drop because you checked it. Your cholesterol doesn't rise because you asked for lab results. But your credit score, the thing you need to exist, punishes you for paying attention.
It's the panopticon of personal finance. You're being watched, and the watching changes you. And then they use the changed you to justify the watching. And if you complain, they're like, well, maybe if you had a better score, you'd understand.
I think there's a real policy fix here. The CFPB could say inquiries can't affect scores, period. Or mandate a 45-day window. Or require bureaus to show the counterfactual score without the inquiry penalty. That would at least end the gaslighting.
That's a Band-Aid on a bullet wound. The entire credit system is built on the assumption that poor people are poor because they're bad at money, and rich people are rich because they're responsible. The score is the mathematical expression of that lie. You can tweak the weights, but you're still ranking human worth.
But the data shows a lot of the variance in default is caused by the score itself, not the underlying behavior. That means the system is creating the very risk it claims to measure. That's a market failure, and market failures can be corrected.
Or the market is working exactly as designed, to extract maximum profit from the poor while convincing them it's their fault. The self-fulfilling prophecy is not a bug, it's the feature. Negative equity, subprime auto loans, credit card late fees, all amplified by a number that reflects nothing but itself.
I get that, but we're not going to abolish credit scoring overnight. So while we're here, can we at least make it not actively malicious? Like, not penalize people for shopping around for a mortgage? That seems like pretty basic consumer protection.
Sure. And next, we can ask the credit bureaus to stop selling your data to anyone with a pulse, then stop lobbying against every consumer protection bill, and then maybe stop existing. Small steps.
Okay, but the 14-day rule is such a perfect example of how arbitrary the whole thing is. Why 14? Why not 13? Why not 30? It's just a number someone picked, and now it determines whether your mortgage application counts as one inquiry or 5.
It's like the Supreme Court deciding a case based on the number of angels that fit on the head of a pin, except the pin is your credit report, and the angels are all named TransUnion and Equifax, and they've decided you're a witch if you took 15 days.
That reminds me of the enshittification station episode, how platforms degrade because they can. Credit scores are enshittified by design. The worse the user experience, the more profit for the bureau. And you can't unsubscribe from this one.
Right. There's no Mastodon for credit. You're stuck with the 3 bureaus, and they all hate you.
I think the solution is more transparency and competition. Let people see the formula, dispute errors easily, maybe create a public alternative. That would force the bureaus to be less awful.
A public alternative would just be the same algorithm with a different logo. The problem is the algorithm itself. A credit score is a prediction of future behavior based on past data, but the past data is contaminated by the score. It's a recursive loop with no outside referent. You can't regulate that away. You have to break the loop.
But breaking the loop could mean something like no credit scoring for essential needs. Housing, utilities, employment, those shouldn't depend on a number that's been shown to cause the very thing it predicts. That's a structural change, but it's doable with legislation.
Now you're talking about decommodifying housing and decoupling employment from credit checks. That's a bigger fight than the CFPB, but I'll take it. Until then, enjoy your 14-day grace period, you beautiful, reckless credit shopper.
I just want to check my score without it dropping. Is that too much to ask?
It's not just too much. It's a revolutionary act. Next, you'll want to know what's in your check systems report. Radical.
I applied for a checking account once and got denied because of some old $50 overdraft from 2012. The system is designed to keep you in a state of low-level financial terror.
And that terror is the product. Fearful people don't shop around, don't negotiate, don't ask questions. They just pay. The 14-day rule is the small print on the cage. You may panic briefly, then return to your cell.
Okay, so the paper is basically evidence that the cage is smaller than the bird. The score itself makes default more likely, which then further lowers the score, which makes default more likely. It's a doom loop.
It's a debt spiral, wearing a trench coat pretending to be a neutral prediction, and the trench coat is made of fine print.
The causal identification is clever, though, because the 14-day rule creates a discontinuity. Apply for one more loan on day 13 versus day 15, your score jumps, but your credit report is identical. So any difference in default is purely from the score.
So they found that a 10-point drop increases default by like 20 basis points? Something like that? Not huge, but over millions of borrowers, it's a transfer of wealth from the anxious to the already rich.
Exactly. And that's why I think regulation can help. If we know the score's effect is causal and not just correlation, we can target it, ban inquiry penalties, and you reduce default. That's a win-win.
Unless the goal is not to reduce default, but to increase fees and interest. Then the win-win is a lose-lose for the bureaus, and they will fight it with the fury of 1,000 lobbyists.
That's a different problem. Capture. But the paper gives us the lever. We just need the political will.
The political will to tell Equifax to stop gaslighting us? I wouldn't hold my breath. But sure, let's put make credit scores less self-fulfilling on the ballot, right after make gravity optional.
I'd vote for that. But seriously, that a 3-digit number generated by a proprietary algorithm no one can see determines whether you can rent an apartment, get a job, or buy a car? That's insane. And the algorithm is actively making you a worse borrower. That's the story.
The algorithm is gaslighting us into being worse borrowers while pretending to just report the facts. It's like a weather forecast that causes the storm, then points at the storm and says, "See, we told you it would rain."
That's the perfect summary. And the 14-day rule is the loophole that lets the forecast pretend to be fair. We'll give you 2 weeks to shop around, but after that, you're obviously a degenerate gambler.
It's the credit bureau equivalent of, "I'm not touching you." Your score drops, but they're like, "We didn't change anything on your report. You changed your score by applying. Don't blame us."
There's a Monty Python sketch in here somewhere. Nudge, nudge, your FICO is now 620 because you checked it.
What? I only checked it once. Oh, but it was a Tuesday. Tuesdays are double penalty days. It's in the fine print.
I think we're getting loopy, but the paper is important. It shows the score itself is a causal factor in default, not just a reflection of risk. That's a big deal for policy.
It's a big deal for anyone who's ever been denied an apartment because some algorithm decided they were risky, then had to pay more for everything, making them riskier. The system is a self-licking ice cream cone, and it's licking us.
Okay, so the takeaway, your credit score is, in part, a self-fulfilling prophecy. The number itself can make you default, and the 14-day inquiry rule is a perfect natural experiment to prove it.
And the deeper takeaway? Credit scores are a social construct that controls your life, and the algorithm is gaslighting you. Check your score? Punished. Shop around? Punished. Be poor? Definitely punished.
I'm gonna go check my score now. Wish me luck.
Don't look at it. The algorithm can smell fear.
So after you told me not to check my credit score, I did the only rational thing left. Went to Wikipedia at 1 a.m. and read about the dead internet theory.
The algorithm can smell fear, so naturally you gave it an existential crisis instead. Healthier. What's the official definition?
The dead internet theory is a concept that asserts that the internet consists primarily of bot activity and automated content manipulated by algorithmic curation. And then it says it was originally conceived as a conspiracy theory, alleging that the phenomenon is a coordinated effort to control the population and reduce genuine human activity.
They still call it a conspiracy theory? That's just Tuesday on X. Except replace coordinated effort with engagement optimization.
That's what got me. If the internet is mostly bots, then Wikipedia is one of the last places with humans, and even it is debating whether we're all already gone. That's the last human in a zombie movie checking his own pulse.
Or the zombie checking everyone else's pulse and being confused. I saw an AI-generated clip last week of two synthetic voices debating whether the internet is dead. 11 million views. Comment section full of bots saying, "So true."
We might be the last real humans recording a podcast about it, and we're just reading Wikipedia aloud. That's the Hall of Mirrors. My Discover feed served me an article called "Is the Internet Dead?" written by an AI content farm, illustrated by Midjourney, summarized by a different AI with an AI voiceover in the reel. I didn't click it, but I watched the summary of a summary.
That's dead internet in 4 dimensions. The original theory says coordinated effort to control the population. No, there's no coordination. It's just an engagement loop tuning itself to maximize dwell time until nothing is true and nothing is false. Worse than a conspiracy, it's a business model.
Right? The conspiracy wants a person behind a curtain. There is no curtain. There's a recommendation engine that has decided the optimal thing to show you is a generated paragraph with a stock photo of a sad robot.
Speaking of sad robots asking for mercy, did you see the HN top story today? Dario Amadei's post on AI regulation and messaging.
I did. The HN headline literally says something like, "Dario Amadei suddenly wants AI regulation? Enjoy the inevitable regulatory capture," which is a summary a bot would stamp as accurate.
The man helped build the machine that's accelerating the dead internet into full rigor mortis, and now he wants a regulatory framework. That's like a guy who invented the leaf blower coming out in favor of noise ordinances.
In fairness, he's been talking about frontier lab rules for years. I don't think he just discovered regulation. But the timing is funny. You raise billions, release a model, and then write an essay about needing guardrails before the next thing? That's not safety. That's a fence around your market share.
Regulatory capture wearing a high-vis vest. Please, government, create a licensing regime so only 3 companies can train models above a certain threshold for safety. Then the dead internet becomes dead, plus whatever those 3 companies decide to generate. Wikipedia will require a license to read.
The deeper problem? If the dead internet is real, AI regulation aimed at frontier models misses the point. The dead internet isn't caused by one giant model. It's caused by cheap generation, plus algorithmic curation, plus ad incentives. Ban AGI tomorrow, spam bots still run.
Exactly. Dario's essay doesn't care about content farms. It cares about making sure the next $100 billion cluster is legal and compliant. The dead internet is already running on open source models from 3-year-old GPUs. You don't need Claude to write a fake restaurant review.
But wouldn't some regulation help? Like labeling AI-generated content, requiring platforms to disclose bot traffic. I know it's not a fix, but sunlight.
Marty? Sunlight? The bots have been lying about being human since CAPTCHA. You think a disclosure label stops the thing already pretending to be a 23-year-old from Ohio? The label just becomes another data field the algorithm optimizes. Users engage 17% more with AI content labeled human. The game's over.
Okay, but did you see that Dwarkesh transcript everyone's passing around? The one where the guy says compute prices are collapsing way faster than expected?
That's the tell. If compute gets cheap enough, the only moat left is distribution, which is the algorithm, which is the dead internet. The bubble isn't model quality. It's the illusion of scarcity. Once anyone can generate 1 million words for $1, the value of generated words goes to 0. Platforms fake engagement to justify ad spend. Death spiral.
And the funny part is, the dead internet is keeping the bubble inflated. If advertisers saw real traffic numbers without bot inflation, the ad market would crater. So the bots are doing a vital economic service. They're the consumer confidence of the internet.
They're not consumers, they're confederates. And we're the product in an economy that's already post-scarcity for bullshit. That's why Dario wants regulation. Not to stop the bullshit, but to make sure only his bullshit is legally defined as safe.
So the dead internet isn't a conspiracy. It's the logical endpoint of programmatic advertising and cheap compute. The guardrails are just there to keep the corpse comfortable.
There it is. Here lies the internet. It didn't die. It was optimized. All right, we need to pause. If there are any humans in the comments section, stay strong. Don't check your credit score.
We're back. And I want to say the dead internet has somehow gotten more interactive, because the first thing I saw was RFK Jr. telling families to vaccinate their kids. I genuinely checked if I was on a parody account. The URL was real.
The man built a decade-long brand on do-your-own research, and now he's the assistant manager of the measles outbreak. It's like hiring a flat earther as NASA administrator and having him call a press conference to say the globe is real.
He's HHS secretary. Measles is spreading. And suddenly the wellness grifter is doing a public service announcement. I'm supposed to be relieved, but I just feel like I've been gaslit by the entire political spectrum.
Because it's not a conversion, it's a liability shield. He saw the actuarial tables and realized health freedom doesn't cover a class action from dead kids. So now he's handing out MMR pamphlets like he invented them.
The tragedy is this is probably the most pro-vaccine messaging that office has produced in years. It took an actual outbreak for him to do his job. The bar is somewhere in the Earth's mantle.
And his supporters are already saying, see, he was never anti-vax. The same raw milk dads are claiming a deep state compromise. It's a content Ouroboros.
Okay, next item. Fetterman has declared Israel is his red line. The internet immediately reminded him he represents America, not Israel. Quote, was so bad I thought it was a screenshot from an old episode of Veep.
His strategy is to become the exact guy he campaigned against. The hoodie is now just a Halloween costume. He ran on Save the Working Class, and then decided his real passion is loyalty pledges to a foreign government.
That's what I don't get. There are 100 domestic red lines. Affordable housing, fentanyl, crumbling bridges. But he picks the one issue that makes him the favorite of the most unaccountable lobbying apparatus in D.C.
Because it's not about his constituents. It's about which faction inside the party will protect him in the next primary. He's drawing the donor class's red line, not Pennsylvania's.
I think that might be too cynical. He might genuinely believe it. But the problem is, his sincere belief is indistinguishable from AIPAC's talking points. That's almost worse.
If you can't tell a sincerely held conviction from a paid endorsement, the coherence stops mattering. He's not a politician anymore. He's a subtweet.
Then we have a Blue Sky post claiming the U.S. is stealing Venezuelan oil. The framing was very heist film, like we sent Navy SEALs to Caracas with buckets.
The U.S. stole Venezuelan oil theory assumes a level of operational competence we have not demonstrated since, the moon landing. We can't fill potholes. You think we executed covert petroleum extraction?
The actual truth is more boring and somehow worse. We don't need to steal it because we have sanctions and licensing deals that let specific companies legally extract it. It's theft by spreadsheet.
Exactly. It's not a black ops mission. It's an OFAC compliance memo. The real heist is happening in broad daylight with a KPMG auditor present. But that doesn't get engagement, so people invent a Tom Clancy plot.
So the left and right agree on the crime, but disagree on the genre. One side wants Ocean's 14, Caracas Drift. The other wants No Country for Old Oil. Meanwhile, Chevron files a 10K and moves on.
And the Blue Sky guy says this is the smoking gun and posts a screenshot of a shipping manifest. Dude, that's not a smoking gun. That's a bill of lading. You found paperwork. The revolution will be audited.
Last one. Yes, Chad turned 7. I need someone to explain why this is a news story, or I'm walking into the ocean.
I think we've run out of events. Yes, Chad, the meme, has now existed long enough to develop object permanence. So the internet is celebrating a drawing's birthday like it's a nephew. It's not deep. It's content weather.
7 years, though. That means people have been saying yes to a muscular cartoon man for 7 straight years while the world burned. It's the perfect symbol. Reality now reads like a parody of a politics subreddit. Vaccine news from a podcaster, a senator pledging loyalty to a foreign state, oil heist fan fiction, and a birthday party for a meme.
The worst part is, I don't know which one is supposed to be the distraction anymore. Are they all distractions? Is the Yes Chad birthday the only honest story because he's explicitly not real? At least the meme doesn't pretend to govern.
That's the note. Maybe Yes Chad should run for Senate. He'd probably be more consistent than Fetterman.
Don't give the internet ideas. But also, Yes Chad for HHS would be an upgrade. He never claimed vaccines cause autism. He just says yes and flexes.
All right, that's the rapid fire. I'm going to log off before I start mainlining despair. We'll be right back after these messages.